Hi, everyone. Welcome to today's webinar. My name is Laura Hersher, and I'm the Senior Channel Account Manager here at Webgility. I'm going to be your host, trying to make it as fun as possible today to talk about some sales tax concerns and some strategies moving forward that hopefully everyone will find helpful. We're absolutely thrilled that more than 260 online businesses and accounting professionals from across the country are joining our audience today to learn more about sales tax concerns for small businesses. Before I go ahead and introduce our panel of experts today, I wanted to go over just a quick few reminders for all of you in the audience. If you have a question for our panelists, please feel free to use the Q&A function located down there in the right-hand corner of your Zoom meeting screen. We'll hold all of the questions for the end, and then we'll get through as many as we can. If we don't get to yours, don't worry about it. We'll be following up with the webinar with a blog that takes a deeper dive into some of those other questions of yours. If you have any technical questions or concerns with Zoom, we've all been there, please feel free to use the chat feature in Zoom. One of our Webgility team members will reach out to you directly to help you out. And then shortly after today's event, we'll upload the webinar recording to our website. We'll also email it to all of you in attendance. So you can go ahead and listen to it again if you'd like, share it with your colleagues, however you want to use it. All right, we're going to go ahead and get to it. I think it's safe to say that 2020 was a year unlike any we've ever seen before, both personally and professionally. And to say it was a turbulent one for the e-commerce industry is a vast understatement. Shopify found that at the height of the pandemic, 10 years of e-commerce growth happened in just 90 days. Pretty wild. Although many sectors of the industry saw explosive growth, others, such as the apparel and accessories, luxury goods, those types of categories experienced devastating declines in their sales. Now that we've closed the door on Black Friday and Cyber Monday, probably many of us are saying, thank goodness, we're staring at tax season right in the ugly eye. Staying on top of the latest economic nexus and sales tax laws can be a tall order for even the savviest e-commerce businesses and accounting professionals. But for smaller online retailers, the increasingly complex, constantly changing, as we all know, legislation introduces a unique set of headaches. So today we brought together a panel of e-commerce tax, finance, and technology experts to talk about some of those concerns that we're all feeling, how online retailers can educate themselves on the latest tax legislation, and leverage technology in a collaborative relationship with your accounting professionals to stay compliant. Without further ado, let me go ahead and introduce you to our panelists today. First up, we have Veronica Wasik, CPA. Veronica is an entrepreneur, influencer, educator, and CPA. She's the CEO and founder of VM Wasik, a firm specialized in accounting and consulting for Shopify and Amazon sellers. Veronica also runs the 5-Minute Bookkeeping YouTube channel, blog, and Facebook community, and also operates an online academy for bookkeepers and accountants, 5MB Academy. She is advanced certified in QuickBooks Online and has been named a top 100 and top 10 QuickBooks Pro advisor. Thanks for being here, Veronica. Next up, Brad Scott. He is the Director of Finance at Halstead Bede, a family-owned e-commerce wholesale supplier of jewelry worldwide. Scott handles Halstead multi-state sales and income tax registrations, filings, and reconciliations, and all other accounting needs. He also leads Halstead's legislative advocacy efforts to achieve multi-state sales tax uniformity and simplification, with the objective of making compliance requirements for remote sellers less onerous. You've got your work cut out for you, it sounds like, Brad.
A little bit.
Alex Oxford, apologies. Alex is the founder of Tax Valet, a sales tax firm that eliminates the hassle and risk of e-commerce and software companies. Alex and his team oversees sales tax for over 12,000 sales and use tax returns each year. Again, you have quite the workload cut out for you there, Alex. Thanks so much for being here. And last but not least, Soonchul Choi, CPA. Soonchul is a certified public accountant and the chief operating officer at Webgility. He started his career in public accounting at Ernst & Young and has held accounting and finance roles at Broadcom, ViewSonic, Wells Fargo, and Schwab. Soonchul single-handedly manages Webgility's financial systems. I can attest to this. and reporting by combining his 15+ years of industry experience with accounting software automation across multiple applications. Thanks so much for jumping on, Soonchul. Thank you all for being here. We're going to go ahead and kick into our first topic, if that sounds good to everyone. We'll kick this one off with you, Alex. What are the unique sales tax concerns for e-commerce businesses?
Well, there are quite a few that e-commerce businesses need to keep in mind. Before we can talk about the unique challenges, I just want to start with a high-level overview of sales tax. So every business needs to pay sales tax in a state if they have sales tax nexus. And nexus is just a legal phrase that means that you have a sufficient presence in a state such that you need to begin collecting and remitting there. Now, there's a number of ways that you can get sales tax nexus in a state. The most common way is having a physical presence. However, the unique challenge for e-commerce businesses are two. The first is having a physical presence through inventory. So this could be storing your inventory in an Amazon FBA warehouse using a 3PL. Or opening up your own warehouse. And the second is crossing economic nexus thresholds. Economic nexus thresholds are new. This is what came out in 2018, and this is what you might hear referred to as the Wayfair case. And it's one of the biggest, most instrumental developments in the sales tax space that directly impacts e-commerce businesses. And this is where, even if you don't have a physical presence in a state, if you cross certain sales or transaction count thresholds, typically $100,000 in sales or 200 transactions, you now have to begin collecting and remitting sales tax. And so it's very easy for a small e-commerce business to almost overnight have sales tax nexus and to need to begin getting sales tax permits in a handful of states when you might not even realize it. And you're just based in maybe out of your home in Kentucky or anywhere really.
Awesome. That's a big first question to kick off with, but thanks so much for that. Kind of segueing into that doozy of a first question. How have U.S. tax laws changed in the last 3 years, and how is that impacting online sellers? And I'll let Brad, you kick this one off.
Well, I don't really want to refer to this as a U.S. tax law change because it's not. It was something that came about because of the Supreme Court case in June of 2018, and that was South Dakota v. Wayfair. And basically what that did was it threw away the physical presence nexus, or the physical presence standard that Alex just referenced, and gave us the nexus standard. And really more importantly, a company of our size, we're 25 employees here at Halstead, we now have to be cognizant of state and local sales tax regulations across all of the states in the country. So small businesses like ours, e-commerce businesses, typically operate out of a single location or a few locations around the country, and they become very familiar with their state and local tax requirements within those locations. But it's not common that we have to think about what's going on in the state next door or 5 states across the country. And Wayfair basically told us, unless Congress wants to intervene and limit the ability of states to reach beyond their own borders, we now have to be cognizant of what's going on in all of these other states. There are currently 45 states that have state sales tax. Alaska has municipal tax, but they don't have a state sales tax. And so what you end up with is 46 different states, the District of Columbia, the outlying regions like Puerto Rico and America Samoa, that you've got to pay attention to and know what their tax rules are. And so calling this a U.S. tax law change kind of glosses over the fact that it's actually 50 different states that you have to pay attention to. What's more is that since the Wayfair case, Wayfair initially was just about sales tax. States are now using it to lever their way into gross receipts tax, income tax, consumer protection, consumer privacy, and even beyond that, foreign countries are now using that precedent through the OECD to implement taxes and regulations across international borders as well. So small businesses like ours are now facing a lot more criteria that we have to pay attention to than we did prior to the Wayfair case.
Yeah, great insight there. I think, yeah, it's expanding beyond just the saying US sales tax laws. So yeah, absolutely. Thanks so much, Brad. How far ahead should small businesses begin preparing for tax season, Brad, would you say?
Well, I think tax season is no
Yeah.
longer a real thing. The reality is that sales tax is an ongoing requirement. We file in 20 different states. Most of those states have a monthly filing requirement. A few have a quarterly filing requirement. Some have an annual filing requirement, but that's pretty infrequent. And so if you want to boil down your requirements to just a single period over the year, you're going to be missing out a lot on what's going on in sales tax. And so it's expanded beyond those months. And in fact, I don't even do this all on my own. We use tax valet services for a lot of those states because it is just, there's so much to keep track of that as a small company we can't. And I think Alex could probably talk about that quite a bit as well.
So I would definitely echo what you just said, Brad. There is no tax season. It's funny, since I'm the owner of Tax Valet, I've got a lot of buddies saying, "Oh, you're probably real busy with the April deadline for taxes." It's like, yeah, we're busy in April and January and May, every month of the year. But I think there is a really good part of your question, Laura, which is like, when should businesses be thinking about this, and how should they be thinking about the flow of work, right? And realistically, a lot of e-commerce and small businesses, they don't think about it until they're thinking about income tax. And I think that does their business a disservice, and it could pose a risk to their business. So realistically, any business can have nexus in any state if they cross the economic nexus threshold, or if they somehow have a physical presence in the state. So this is a rolling requirement. If you hire a contractor, an employee, sales reps, you start storing inventory, you open a showroom or an office space, at that point, you need to start thinking about, do I need to get a permit in this state? And similarly, if you have a huge spike in sales, let's say Christmas, or let's say you sell turkey basters, it might be a good time right after Thanksgiving to do an economic nexus analysis to see how your situation has changed. What we tell our clients is that we at least want to check in at least once a year to see, how has your nexus footprint changed? Do you have nexus in more states than you did before? Because we don't want a liability just growing within the business, because where you can really get in trouble is if you have nexus for 1 year and 2 years and 3 years, then you might wake up one day and have a really bad day. So one of the core tenets of Tax Valet is get your annual check-in. It's like going to your doctor and just having your regular checkup. If you miss it, you might have a bad day a few years from now.
Yeah, something you definitely can't stay stagnant on. That's a great analogy there for sure. Get your annual exam. Awesome, thank you. And kind of rolling on that same subject, what role do or should accounting professionals play in terms of keeping e-commerce businesses abreast of the latest sales tax laws? We know that obviously small businesses are relying on their accountant to be that advisor. Veronica and Soon Chul, if you guys could take this one.
Sure, I'll start first. So we have to understand, first of all, that as accounting professionals, we may not deal with the sales tax. There are few people that actually are sales tax specialists like Alex and his team. And so rather than running away from sales taxes, which is what a lot of accounting professionals want to do with good reason, we have to then educate ourselves of the general rules that are affecting our clients, because ultimately, as an accountant, bookkeeper, I'm in the front lines for our clients, and so I need to be able to then see that, okay, there is risk that maybe they do need that nexus analysis once a year, and I need to then bring someone into this financial team for my client who can handle the sales taxes. So that's one thing that I have done. Even though I don't do the sales taxes, I've educated myself and learned more about them, so that when I see an issue, then I can bring in the right expert for my clients.
Yeah, and I would add that when we're thinking about sales tax, you not only have the sales tax piece, but then you need to have the financial records to support sales tax and a potential audit. And so that's where accounting professionals really come into play and can help make sure e-commerce sellers have all the proper accounting records and documentation should that sales tax notice come in the mail.
I want
And
to
one
throw in
thing that,
something.
oh,
We are an independent operator. We've been our own private entity for almost 50 years. And usually when something new comes along, we try to figure out how to do it internally. And after the Wayfair decision, I don't think we fully appreciated just how complex interstate sales tax is. Companies like Walmart built out SALT departments that could handle interstate requirements. And the idea that we could do it on our own, we foolishly believed was possible three years ago. And what we have come to find at this point in time is that if you don't have a team of experts at your back helping you out on this, then you're going to find yourself in a lot of trouble. And I think Alex is probably going to stretch on that, so I'll go ahead and be quiet.
well, yes and no. What I was going to say is if you are an e-commerce business and you know that you're looking for sales tax help and you have a CPA or you have an accountant or bookkeeper, I think that's the first resource that you should turn to, right? Using that last analogy, they're sort of like your primary care doctor. Go talk to them first, but have an open and honest conversation about, are you comfortable with taking this on? Can I lean on you for my sales tax support? And with that, I think there's a couple of areas that you should really dive into. Like, hey, are you going to be responsible for monitoring my nexus situation? And what are we going to do to monitor that continuously? Are you comfortable with researching product taxability rules to help me understand if my products or services are even taxable in the states that I'm selling? Are you going to be handling all the filings and payments, or are you just going to be setting me up with technology and I'm going to be managing it myself? And also, if there's an audit, are you going to be comfortable taking care of that for me? Where we see the most issues with accountants, bookkeepers, and CPAs is when their clients turn to them and the CPA says, oh, sure, we'll take care of your sales tax, but they don't really define what that means. And then 1 or 2 years later, there's an issue, there's an audit, something's messed up. And if the business owner had been just a little intentional by making sure that they're fully aware of what relationship they're entering into, and so is their provider, they could avoid this headache later on.
Yeah, and to add to that, I think that there are some very well-intentioned accounting professionals that don't understand all the rules and understand the value, again, of bringing in that expert. And sometimes my clients will come to me and say, oh, my CPA told me I have to register in all the states, all over the country to file for sales taxes. And no, that's not good advice. And that's, would be completely overwhelming. And I can see why online sellers are so confused because there's so much misinformation. But I love what you said, Alex, about the questions that online sellers need to be asking, because ultimately it's about knowing what to ask so that then you can find the right person to work with.
Yeah, absolutely. I think that's crucial, is defining that up front in the relationship, for sure. I actually, in one of my previous roles, had someone tell me that they'd rather face a root canal than go through putting their taxes together. And that's always resonated with me. And I think this is where we're at today. And this is just such a overwhelming, daunting task to the small business owner on top of everything else they're dealing with. So you're not alone if you're feeling that way on here today in the audience. I just always share that quote because I think it's pretty telling. But with that overwhelming, daunting feeling, where can small businesses really go for more information that they're going to find useful and stay up to date on this? Brad, or anyone, if you have secrets for us, we'd love to hear.
There isn't really a national resource that you can go to. There is no one place that you can go to get all of the information that you need. Not on your own anyways, which is why you really do need professional help. We here at our company researched the Department of Revenue websites, the regulatory statutes for all of the sales tax states years ago. And it was a project one time. And the problem is that project is never ending, because as state legislatures go into session, the rules change. And so every single time you end up at the end of a legislation season in any state, you've got to get back in there and find out if they've made changes. And so really what it comes down to is you do need a firm that specializes in doing that research for you, unless you have a team of people that's capable of doing it yourself and you've got the resources. But a lot of small businesses don't. And so again, it comes back to looking for that professional pool of resources that you can draw from. And as mentioned earlier, that local CPA may not have that level of familiarity. Your local tax attorney may not have it either. And so companies like what you guys are putting forward today are the places that you need to turn to. And for a small business owner, that's kind of a tough pill to swallow, because we're used to being independent. But the fact of the matter is, with the internet, we're so much more connected than we've ever been before. And I think going back to that true state of independence is, as you grow, it's not possible.
I would add, so there's sort of a spectrum of information and resources, going from the most specific and the most detailed, but the least helpful, all the way to the most helpful, but maybe the least accurate. So the most detailed, it's like the law of the land is going to be turning to the statutes, actually looking at the written law, the written text. And that's really challenging even for us. And this is what we do all day, every day. And sometimes it's very fuzzy and very difficult to understand, because attorneys are only part human. They speak a totally different language, and it's really hard to understand, especially the legislators, right? After that is going to be the Department of Revenue's websites. They have FAQ documents. They have other resources that they've put out there. These are generally a lot easier to understand, but sometimes it's inconsistent with the written law. And that's one of the things that we do for advocacy, is go out to the states and say, what you've written is not consistent with the law, so how would this play out in an audit? Beyond that, turning to resources that have been put together by sales tax experts. Some software companies or professional service firms have great guides. We have an economic nexus guide. We have a US sales tax guide for e-commerce businesses. If it's put together by an expert, that's great. The last place that I would look for sales tax advice, though, is the hearsay in the online communities and forums, the Amazon seller groups, the e-commerce groups, where you're hearing about what other business owners think, because historically the business owners perpetuate information that is more like what they want to hear or what they want to believe, but it's not true, unfortunately. And this is where dangerous ideas come from, because you might hear, oh, I don't have to worry about it. You adopt that mentality, and 10 years from now, it could be real bad. One quick note, we don't have a centralized resource for the entire United States. However, the Streamlined Sales Tax Group is a great resource, at least for understanding product taxability definitions. If you're selling supplements, clothing, software, digital products, the definitions are real gnarly, and they vary on a state-by-state basis. The SST has standardized definitions. So I think there's 26 member states. All of these states share the same definition, and you can just pull that up and find out, what's the nexus threshold, what's going to trigger nexus, is this product taxable, and that gets you about halfway there, at least.
Perfect. Better than what we had before. I think last year was kind of the true testament of needing something like that. It was changing every day for a while through COVID, I know. So thanks for that. Soon-Chul, how do you think, since you're the technology expert and have used a lot of this in your own work, how do you think small e-commerce businesses can really leverage technology to make the sales tax process and their overall accounting process easier for them?
Yeah, Laura, in my bio that you read, we kind of joked around that I single-handedly manage our finance and accounting here at Webgility, but we don't have an accounting team here. It's just primarily myself, and we do outsource a little bit of bookkeeping. But when I'm thinking about automation, I think about, okay, what are my goals? What am I trying to achieve here? And a few things that come to mind is how I save time and how we deploy our financial and human resources here at Webgility. Additionally, we look at the transaction, record keeping accuracy, and we look for trying to achieve stronger sales tax compliance and defense against potential audits. But additionally, you have the aspect of those who are tax exempt. So when you're checking out a customer during the sales process, there are some nonprofits who are tax exempt as well. So you want to make sure that they have the best experience possible. And by leveraging automation and technology, you can improve in those areas. And then more specifically about how to utilize accounting software and technology. When you look at your general ledger transactions, your cash, banking, credit card transactions, receivable and credit card transactions, inventory management is very important, especially as the whole purpose of this webinar is about e-commerce selling. That's very important to try to automate and improve the accuracy there. And finally, your accounts payable. As much bill payments as possible that you're able to do online and leverage automation for will save you a lot of time.
Absolutely. Yeah. I think the technology piece is so crucial in understanding how to implement it and what tool is right for you and your business. So thanks, Soon Chul.
And can I add also that there are a lot of tools and apps that can save you a lot of time. But one of the things that I deal with my online sellers is that they think that, hey, I just have to automate and I won't have to do any of it. And so keep in mind also that it is about bringing together the right apps, but it's about putting together a financial system, and it still needs attention. And either you have to give it attention or you need to hire someone to do that for you, because automation doesn't mean done for you completely. There are still things that you have to do to maintain your finances.
Yeah, absolutely. That's a really good point. I think, yeah, nothing really in the technology world is set it and forget it, unfortunately. At least yet. It may get there at some point, but yeah, important to keep checking in on that and making sure all systems are a go. So thank you very much. How should online retailers be collaborating with their accounting professionals to keep their books organized and make the most out of these automation tools that we're talking about, Veronica? How do you work that with your clients, and what have you seen?
That's a great question. And one of the things that I love about working with online sellers is that they're so much more proactive about working with the financial side of their business. But it's really about putting together all of the different pieces of the puzzle to then set up an effective financial process. And you can definitely work with a professional to help you do that. You have to keep in mind that there are many accountants now who are also technology advisors. So, we're not crunching numbers and doing data entry anymore. Many of us are more modern accountants and very well versed in the different technologies and integrations that we need to bring into your accounting to streamline, like Sanchul said, the inventory, the payroll, receipt capture, accounts payable, etc. So you really want to start with setting up your books, making a decision on which accounting software you will use, whether it's QuickBooks, Xero, or whatever that looks like. Then look at streamlining your chart of accounts, because it's really the foundation of your accounting system and how you will categorize all of your transactions. And then selecting those automation tools for how are you going to bring in all of the different the sales and the components of sales from your different sales channels into your books, or how are you going to reconcile all of your income with the payments received from your payment processors. And it's really important also as an online seller for you to decide, will you be doing the books? Is that something that is the best use of your time, or do you need to outsource that to a professional? And again, remember that automation, it doesn't mean set it and forget it. You have to still put time and effort into your books. And that's why it's important then, again, for you to decide when is the right time for you to outsource that and to work with a professional.
Yeah, and I'll add that around automation, there's so many different parts of your business that you can automate. If you try to do everything at once, it could be very overwhelming. And so I, encourage small business owners when they're working with their CPA firms to identify, well, what are some possible quick wins? What can we get automated first? What makes sense? And then, as soon as you're ready to automate more, you can do so, but you don't have to do everything at once. But taking some first steps as soon as possible will really help your business.
The most important automation piece for businesses is the tax calculation component and making sure that your products are set up to calculate the tax at checkout. If you don't do that, then the filings almost don't matter because you won't have the money to pay it.
That's a good point. I wouldn't have ever thought about that. So really good point there. And yeah, Sinchul and Veronica, to your points, deciding what's going to be best and then how to implement it in stages is probably, I think, the best way that I've seen that done. And it can, again, be very overwhelming if you don't kind of prioritize what needs to happen first at most important level. So yeah, really good points there from everyone. Really good insights from all of you, from the panelists. We have a couple of great questions that I believe have already come in. And we're gonna wait for, we're gonna give you guys a couple of minutes to think of some questions that you might have that you wanna throw in the Q&A and kind of take a break just for a minute. And then I'll get back to the Q&A and we'll get going through some of those. So I'll wait 1 minute. Okay, we are going to dive in because we have quite a few, I guess. So the first one that we are going to go through is, what is the #1 mistake e-commerce businesses make when it comes to preparing or filling their sales taxes out? If anyone wants to dive in, or if that's a doozy.
Well, in my mind, the biggest mistake is creating assumptions about where they do or don't have nexus. That's the #1 issue that we see with our businesses. And that's before they're even doing the sales tax filings, right? It's the #1 issue we see. Businesses just assume, oh, I don't have to worry about paying sales tax in other states. And that's a huge problem. Now, when it comes to actually doing the sales tax returns or getting set up, I would say the biggest mistake is setting up the tax calculation settings incorrectly so that they're not collecting the right amount of tax from customers, and so they're not paying the right amount to the states.
I'm going to piggyback off of that.
Oh, sorry.
Go ahead, Veronica.
Thank you, Brad. I was just going to say it's also collecting sales taxes, but not remitting them to the states.
Yep.
I'm going to piggyback off of both of those and kind of broaden out the conversation a bit. We've been talking about sales tax so far, which implies that the sales are taxable to begin with. And a lot of companies that are distributors, wholesalers, manufacturers that deal in business-to-business transactions that aren't accustomed to dealing with sales tax think that it doesn't apply to them. Wayfair is also frequently discussed in terms of it being an online issue, when in fact it's really an interstate commerce issue. So it doesn't matter if you're online or not. It doesn't matter if you're making retail transactions or not. You still have to be aware of these new rules and regulations. And then you have to make a risk assessment as to how heavily you want to engage it. If you are going to be filing $0 returns across the country, in some states, you're not going to be penalized for that. But in other states, if you're not filing those, you're still going to face penalties and interest that pile up over years. So assuming that this is really just for taxable transactions and retailers is kind of short shrifting the overall conversation. And you've got to acknowledge the fact that even if you're not dealing in taxable transactions, you need to be paying attention to this.
And for wholesalers, assuming that all of the transactions are going to be exempt, which unfortunately in the tax world, you're guilty until proven innocent. And so if you only do B2B resale transactions, you've got to collect the exemption certificates. And that's the number one mistake that wholesalers make, I would say, is they're not collecting and verifying those.
Yeah, I would
Awesome.
say 87% of our transactions are wholesale. So we have exemption certificates for almost 4,000 of our clients. And if you don't have that exemption certificate, the default state of that transaction is taxable. And until you have that exemption certificate, the departments of revenue, they don't look kindly at that business practice. So if you don't have that exempt certificate, you better be collecting and remitting tax. And if you didn't collect it, you're still going to be remitting it.
Awesome. Good insight there. Thanks for whoever sent that question. That was a good one to start off with. Next one is coming from Matt Powers here. Thanks, Matt, for joining. Can you explain what responsibility 3P sellers have from a sales tax perspective still on Amazon?
Well, that's a very interesting question. And the answer is it depends. So if you are only selling on Amazon or only selling on marketplaces only, and you don't have your own website, then overall your sales tax liability and your sales tax exposure is going to be minuscule. And here's why. Shortly after Wayfair, we saw states roll out marketplace facilitator laws. And what these laws do is they force the marketplaces like Amazon, eBay, Etsy to begin collecting and remitting sales tax on behalf of your sales. Now, if you're storing inventory in Amazon's warehouse, that's going to give you, the business, sales tax nexus in that state. However, oftentimes in the majority of states, if you're only selling on an Amazon or a marketplace, then the marketplace is going to be handling the sales tax. You don't have any liability. Now, the big question here is if you're only selling on a marketplace and the marketplace is facilitating the tax and you don't actually owe anything, do you need to get a permit, right? And this is where some states have provided clarity, other states have not. And oftentimes businesses say, either way, we don't care, right? And so this is where it gets into the gray. A lot of states have said if you're only selling on marketplaces, we don't want you to get a permit because you're going to be submitting filings that are for $0 every single month, like Brad mentioned. Other states have said, we don't care if you're only selling on marketplaces, we want you to submit a return to tell us about those exempt sales. And then other states have not provided any guidance. So almost every single state in the country is a marketplace facilitator state. Florida is not. Missouri's not, but they have a law pending, and we believe Florida is going to have a bill placed this year. So if you're only a marketplace seller, you're more likely than not going to not have substantial liabilities. But if you start selling on your own website, you sell on Shopify, WooCommerce, Magento, wherever, that sales tax nexus from the FBA inventory or the 3PL is going to cross-contaminate to your direct-to-consumer sales, and now you have to begin worrying about collecting sales tax on those transactions. Good question. Kind of complex.
Yeah, good question. Absolutely. Thank you. Next one says, I am wondering what we should be charging for sales tax on our internet sales. Is there a minimum for internet sales that the government has set for charging for sales taxes?
Well, there's no good answer to that question because it depends on the state. We don't even know the real number. There are an estimated 12,000 taxing jurisdictions across the country. And whether or not you have to collect tax depends on whether or not you've met that state's threshold. And those thresholds vary. Some states it's $100,000. Some states it's $250,000. California is $500,000. Kansas is one transaction or even $1. So it depends on the state. And so if you're looking for a national standard by which to evaluate your business, you're probably going to find yourself coming up short somewhere or doing more than you need to in other places. Oklahoma has its own separate reporting requirement. And if you don't hit their economic threshold for sales tax collection obligation, if you hit, which is $100,000, if you hit their $10,000 threshold, you still have to report to the state. So there are a lot of different things that you've got to be aware of, and there is no simple answer. Again, it goes back to finding the professional help, and trying to do this on your own is a surefire way to bury yourself in state regs that you'll never get out of and you may never understand.
A lot of businesses that are new to this have a misconception that the sales tax rate they should be using for the entire country is wherever they're shipping from. And I think this stems from origin versus destination-based states. And so if you're shipping a product to another state outside of your home state, you're always going to be using the address of where the end customer is. Now, if it is a transaction that's happening within the same state, then we have to look potentially at where is it being shipped from in origin-based states. I don't want to trip you up, but the number one takeaway from what I'm trying to say is don't assume that you're going to be using one rate for all of your transactions. We see that more than we'd like, and it creates some trouble.
Yeah. Don't assume anything in the sales tax realm, I think is my biggest takeaway right now. If you take away nothing else. Okay, next question here is from Ashton. Thanks for jumping on. So we don't have to begin collecting sales tax until we cross the economic thresholds in states where we don't have physical presence.
If you do not have physical presence and you don't have any other form of nexus in the state, then you wouldn't need to begin collecting sales tax unless you cross the economic nexus threshold. So I say nexus is like a light switch, okay? It's either on or it's off. And there's a lot of ways that you can turn the light switch on. Physical presence is a very easy one. Economic nexus is a very easy one. There's overlooked ones, affiliate relationships, owning other businesses that are selling similar products. So there's a lot of asterisks here for ways that you can have sales tax nexus, but physical presence and economic nexus are going to cover 95% of the situations.
Great. Thanks so much, Alex. Next up from Heather, if you're moving towards hitting a threshold, how far in advance, how many months would preparation and implementation take? Do you need to implement the IT systems and accounting systems to get prepared for collecting or remitting sales taxes?
I will answer that or start out. So in terms of your accounting systems and IT systems, that it would depend, first of all, on the sales channels that you're using and whether you have the ability to then collect sales taxes from your specific sales channel. And then look at the other systems that you might need to do that. But the most important, as I'm sure Alex would agree, is being able to then start collecting that sales tax. And then you can look at whether you'll use a professional to help you file those sales taxes, or if you'll use software to do that.
That's exactly right, Veronica. The biggest hurdle for businesses that are new to getting set up with sales tax is getting that calculation component figured out. And depending on the complexity of the situation, it could be easy as a one-day turnaround, or as complex as Brad knows, a 6-month custom ERP implementation, and we know all about that. And so once you figure out one state, it's generally pretty easy to get the other states figured out. But I think there's a unspoken part of this question, which is how long does it take for the states to get set up and to process the permits? And the answer is it just totally depends on the state. It takes anywhere from 1 to 2 months in our experience. It could take longer if you're not familiar. Each of these economic nexus laws, though, most of them give you a grace period of 30 to 60 days to get registered. But when you register, you can backdate the registration to when you first had Nexus. So as long as, like Veronica said, you have the ability to collect the tax, then it's not a huge deal for you as long as you're collecting the tax and you're going to pay it. Now, What we don't want to see happen is for you to collect the tax and then not register and not pay it, because that's tax fraud and a lot of bad things happen. But what we do not like our clients to do is to not turn on the tax collection, submit the registration, and not turn on the collection until the state processes it, because we're seeing some states take 3 or 4 months, and who's benefiting from that? The customer's not, you're not, the state's not. So this is a little bit of a gray area, and what we say is, if you've submitted the application to the state and you're going to be paying the tax, let's turn the tax on that day so that we're just not wasting money.
Yeah,
And
real quick. Oh, go ahead, Brad.
well, so when we did this, when we decided to start collecting sales tax right after the court case, I would typically say that a software implementation project like this would take us somewhere between 6 and 9 months because of the complexities involved. And we crammed it into about 95 days, and we saw a lot of headaches as a result of that. But because we were registered as supposedly collecting during those 90 days, we still turned that money in. I mean, we expensed it, but the reality is we never ran afoul of the Departments of Revenue. And once you run afoul of the Departments of Revenue, you face an audit, you face penalties, you face interest, and frankly, paying a little bit of sales tax that you should have collected before you've got that button turned on is a lot less expensive than the consequences of not collecting it and not remitting it.
Oh, and for just I know we answered your question in like 1,000 different ways, but you're probably just like looking for something real simple and easy. And for that, I would say probably 2 to 3 months, probably 2 to 3 months for a non-complex, non-custom ERP or website. That's probably going to work for you.
Awesome. Thank you for clarifying that, but all useful information. We're going to take our last question, or actually real quick, Alex, did you have like an example of the tax calculation component? Like you mentioned it a couple of times. If you don't, it's okay.
Yeah, well, the 1,000-pound gorilla in the room that really runs the space is Avatax by Avalara. There are some other tools out there that can do tax calculations. So Taxify and TaxJar, for example. TaxJar is going to be great for the in-app calculation for Magento, BigCommerce, and WooCommerce. Shopify, which is the most common e-commerce platform, you can actually use a third-party tax calculation plugin unless you're on Shopify Plus, in which case you're forced to use Avatax. So Avatax has over 500 integrations, and they're the #1 player here. If you're selling on ERPs or other platforms, then potentially using a tool called Vertex. But Avatax would be the place I would start if your e-commerce platform does not have native tax calculations, or if it doesn't, TaxJar won't do it.
Awesome. Thank you so much. Last question here from Jeff. When we go to a pro, like all of you, what information do you need? For instance, based on this webinar, should we get the dollars and transactions for all states?
Well, so the questions, oh, go ahead, Brad.
Well, I was going to say there's a threshold test that professionals basically submit or subject you to. They're going to ask every question under the sun, and they're going to help you determine where you do and don't have threshold. And because Alex is a professional at this, I think he should probably answer more of it than I will.
Well, when we first meet with clients, the things that we want to know are, where do you currently have permits? What sort of issues are outstanding? Has any state contacted you? Are there any audits? What products are you selling? Where are you selling them? So what sales channels are you selling on marketplaces? And one of the standard questions I ask is, are you using 3PLs or Amazon FBA warehouses? And that's just to help us get a high level overview of like, what's the situation in the territory like? Now, assuming that you engage with a professional, the first thing that they're likely going to want to do is to analyze all of your transaction data. And this is where things get really gnarly if you have 15 different sales channels, or you've migrated e-commerce platforms and you're missing last year's data. So one of the things that you can do internally is to pool the resources. Maybe it's in your head, maybe it's in your bookkeeper's head, or someone on your marketing team, who knows. Get them together and say, where's all the transaction data for the last 2 years, can we get it in a format that's going to have the shipping information, the ship to address, and the sales figures, because that's what the professionals are going to need in order to do this analysis. Veronica, is there anything that you think we should add here?
No, you're right, Alex. And just one thing to keep in mind, because I recently was helping a client to put the reports together so we can give them to the sales tax expert, that even when you look at the number of transactions that my client seemed to have, like all these hundreds of transactions, and then I see that they're all for $0 because he was shipping promotional products to influencers. And so then we had to make sure that we didn't count that as transactions because he wasn't really selling anything. So you have to be careful when you're running those reports to analyze and look to make sure you have real sales and not just counting number of items from the reports.
Awesome. Thank you so much for all of those questions. I know we could stay here all day and talk about this, whether we want to or not. That's probably up for debate, but truly, we'd like to thank Veronica, Brad, Soonchul, and Alex for taking the time out of your very busy schedules to share your insights, knowledge, experiences today. We truly appreciate this. All of you in the audience and attendees, you can go ahead and expect an email soon that includes the recording of today's session. As I mentioned before, we'll also send up a follow-up with a blog that will cover all of the insights and questions that we didn't get to, and we can dig a little bit deeper into some of those. But on behalf of everyone here at Webgility, we appreciate you joining us. We hope you found this valuable. We're committed to empowering online businesses and accountants to thrive in the world of e-commerce, and hopefully we've offered some actionable tips today that will help you do just that. Until next time, we're wishing you all health and prosperity. Thank you so much. Have a great day.